So, guys, welcome back. And today we have to discuss this is the purpose of the financial management information. First, you have to understand that what is management information, and you know that management information is like a helpful guide that the manager use to plan, keep things uh, keep things on track, and make smart decision for their business. You understand what I'm saying? So management information is basically or the helpful guides that that is helpful for the management, and the managers use those information for the planning purpose. They want to keep the things on track, and why they are doing this, because to take a small decision for their businesses. Now if you see here management information, the information used for managers planning, control, and decision making. Now, that's all about giving them the right detail they need, depending on what the business requires, right? So, why does it matter? The question is, why? Why does it matters? And the answer is very simple. That that the more complex or the fast changing in a business, is the more it need correct and accurate you see like management information. For example, let's say a big company with a lot of products benefit more from this plan than a small shop with simple needs. So this is the thing that you have to understand. Now, what do manager use to use it for? So why these information? Why the management information are very important? You may say that what do managers use it for? What are the reason? So managers rely on this information for key main jobs. The first one is planning. They require this information for planning purpose. They also require those information for control purpose. And the third one, they require that information for decision making. So these are the three main jobs due to which the managers rely on this information. Yeah, the management information. We're talking about management information. Now, if you see here that what information is produced different on organization needs and how relevant that information is to the money. So it's all about the need of the organization, that what type or what sort of information they are required and what are relevant for that organization. Now, the more sophisticated, susceptible to change in a business is, the more it will benefit from timely and accurate management information. So when you produce information to the business that or susceptible to the change in a business, so the more benefit it will get from the timely and accurate information. Now managers require information for the essential activity which I have told you. The first one is planning. They require the information for this purpose. They also require information for this and also require for this. Now let's elaborate the planning. Instead of just letting things happen, managers make a plan, right? They figure out the best way to use their resources like your money, people, or time, and write it down. Okay, for example, they might create a budget to decide how much money to spend next month. So this is the phase for which they need the management information. Now let's move on to another job that requires the information is the control. So after making a plan, manager check if it is working. They look at feedback like sales report to see if the result match the plan. Match the plan, right? So at the thing, at the thing go up track, they take action to fix it or make it better. For instance, if a sales are lower than expected, they might adjust this strategy. So that will be the control. Now the third one is the decision making. So managers often have to choose. I'll write it here, to choose between different options, and they use information to pick the best for and improve how will the business does. So for example, if they are deciding whether to lower prices or add a new product, they will look at the sales data to help them when they're choosing. So in short, I will say that management information is like a toolbox for manager. It helps them plan ahead, keep an eye on the progress, and make the right choices to keep the business growing. Now let's see here. We have some stuff that which I have summarized, but you have to just go through it. The first one is management planning. That manager plan a course of action rather than just letting things happen. They decide on the best use of resources under the control. Instead, this is a plan. Now, plans can be stated in financial terms, which I have told you that is budget. Control is the progress needed to be monitored after a plan has been developed and implemented through feedback information to compare the actual result against the plan. Now, there's a comparison that what you actually want and what is reason when you compare them. After that, you're taking the action to keep progress on track or implement improvement. The third one is the decision making. So manager, past situation with a more than one potential course of action, they have some option, and let's say they have option 1, option B, and option C, and they have to decide that which option is good. So after that, they have to decide. So that need information to help them making informed decision and maximize their performance. So that once they get the information, so that it will be very easy, and on their best, they will take informed decision and maximize the performance. Right? Good. Now let's move on. We have activity here. I will just show the activity here. You see here. Here you have to identify that whether it's a decision making or control or planning. So a summary of supply, flour prices for Ravi to use when selecting a supplier. So when they have summary, it means that the thing is passing from the planning and control, and that will be the decision making, right? So management activity, there is a management activity, and you have to decide whether it's a planning, whether it's control, or whether it's a decision making. Now a report, if you see a comparing, so this means that this is the control page because you're comparing the plan and the actual number. Now the third one is a spreadsheet. So this is a raw data that you are preparing that contain the budget. Now you are planning. That's what you have to do for the next year. So that is your planning. Now a report showing invoice. So this is issued to overdue customer have not yet been paid. Now you have a report, and this report is invoice issued to the overdue customer that have not yet been paid. So that is your control. A report showing a summary of competitor selling prices that Ravi uses when considering an increase in RQB selling prices. That will be the decision making. So you have to distinguish between that what is planning, what is control, and what is decision making. So when you have MCQs and exam, then it will be easy for you to identify that whether it's a decision making or control or planning, right? Now let's move on. We have another topic that is management accounting information. So what is management accounting information? So management accounting information is basically all the details. I'll write here all the details managers use to run a business, and that will be like planning, that will be checking the progress and making decision. Okay? So management account information is a smaller form of this. It focuses on a specific financial detail that help manager with their work. Now if you see here, management information include all information provided to manager and is used for various purposes including planning, control, and decision making. Now management account information is subset. What I have told you that this is just a smaller form of this management information, subset of the management information that we have discussed earlier and a very detailed. So this is a subset of that information and generally refer to information related to management accounting. Now typically management accounting information include number first. So the point is that what kind of information does it include? What type of information management accounting information include? So the first one is the budget. You see here, this is the budget, and you know what is budget? Budget is actually is like a plan for future. Okay, and this budget showing that what you add to, so a quantified plan of action for the future period. Although we tend to think a budget is a monetary terms, budget may relate to the other quantified factor such as time. So this means that it is usually about money, but it can also be about other things like time. Clear? And if you see here example that a delivery driver might budget 4 hours to travel from one city to another, and this help them plan the day. So a courier may plan to drive from point A to point B within a planned budgeted time of 4 hours. So this is actually the budgeting we are doing for our travel, right? The second second thing which is included in the management information is the forecasting, and forecasting is basically a guess about, I would say here is a guess about what might happen and future, right? So it helps manager to prepare for the possibilities. Okay. If you see here, a prediction of what might happen in the futures, and that is called forecasting. For example, assumption about the traffic delay might affect the delivery time of the courier. So this means that a delivery driver might predict that traffic will slow down, so they leave earlier to avoid being late. This is the thing that when you are forecasting, you understand that there may be some you have to take some assumption that if there's a traffic, then definitely it will affect your delivery time, and for that reason you have to leave earlier. You have to start your travel before, let's say 30 minutes, 20 minutes. If let's say if you are stuck in the traffic, then that will overcome and that will make your delivery on time, because you have just starting you may like say that you have leave earlier, and that will avoid delay. The third one is variances analysis. So variance analysis means that comparing what actually happened with what you planned. So it's basically a comparison that what actually happened with what you planned. So an analysis of the reason for the differences is the differences between the actual and planned figure. So this is when you compare what actually happened with what you planned and figure out why they are different. For example, we will continue from the example that we have started. So if the driver planned to take 4 hours, but it took let's say 5 hours. So variance analysis looks at why, like maybe there was a roadblock, or it may help like a better plan for the next time. So the thing is that with variance analysis you will figure out the problem, that why the differences occur, and for that reason you will go for the corrective action. So compare actual times versus the budgeted times. You let's say the actual time is 5 hours, the budgeted was 4. So investigate why some journey took longer than expected and update plan for the future trips. Right now, cost accounting information. This is the point number 4, and this tells manager how much thing cost. It's like product, service, and activity. So the cost of the different product, service, and activity. For example, the cost of the fuel of the journey. Okay, so this means that the driver might find out how much they fuel they use for the trip, and this helps them see if they are spending too much and how to save the money. Right now, why is this helpful for the manager? So management account information is basically helps manager to plan smartly, check if the things are going as expected, and make better choices. So it's like giving them a map to run the business smoothly. So in short, I would say that income management account information is a set of tools like budget, forecast, and cost detail, and that manager use to plan and check and improve how the businesses work. Now let's move on. We have another topic, that is identify and assessing limitation. So we have some limitation, and here we have description that why this is a limitation. So what are the limits of the management information? There's some limitation for the management information, and the first one is here is time and cost. Making management information takes time and money. This means let's take time and money. So producing management information takes time, which means it costs money. The information provided must be cost effective. This means that whatever you're getting from the information should give more benefit than the cost you incurred for getting that information. This means that the benefit and saving a delivery should exceed the cost of providing information. Now, however, placing an accurate value on information is difficult, as it impact is unlikely to be predictable and measurable. What does it mean? It means that it should be worth it, meaning the benefits like saving money or making better decisions should be more than the cost of creating it. But here's a tricky part. It's hard to know exactly how valuable information is, because its impact isn't always easy to predict or measure. Clear? Now the second limitation I will show you here, that is based on past event. This means that a lot of this information comes from what happened before, like last month sale. So this means that this can be a risky, because the businesses world keeps changing, and things like new trend rules might make the past a bad guide for the future. So if you see here, this is based on the past, and due to there's some changes, some dynamic in the situation, so that will that will have impact on your decision, because if you take decision based on the past event. So much information supplied to the management is based on what has happened, and this is risky because the business environment is dynamic. This is changing in the environment and constantly change, and the past might not be a reliable indicator of what happened in the future. Clear? So this is the second limitation we have discussed two. The first one is time and cost. The second one, this information is based on the fast event. Now let's move on. We have another limitation. There's no way to know if something significant is missing. This is about if you have missed something. So mean that missing important stuff. I will say like missing important stuff. This is the limitation. The information might not tell the whole story. Information might not tell the whole stories. There could be things happening like a new competitor joining the market, and that no one knows about that competitor yet. So it's left out, and this means manager might miss something big that could affect their plan. So the purpose is when you're missing something, then the management information, which is there's a possibility that you miss something. And I'll give an example. A new competitor may be about to enter the market, and you have missed it, and your information. So the information, so your management information will be, there will be some deficiency. So the information supplied to management is unlikely to be completed. This is because there's almost always something relevant happening in the business environment that those supplying information the management receive is unaware of it, and that is the new competitor. Okay, let's move on to the third. I think it's the fourth. Limitation reductionist to the question computer system reports. This means that trusting, right here, trusting computer reports too much. So computer system produce much of the information supplied to manager, and a report produced by a computer system is often presented very professionally, which can cause manager to accept the report is entirely correct. However, if incorrect or insufficient data is input into the computer, the report produced will not provide accurate, complete picture. So this means that computers often create these reports and they look super professional and neat. Now this can make the manager think that the report is 100% correct. But if the data put into the computer is wrong or incomplete, then the report wouldn't be correct either. So the thing is, over reliance on the information that you are getting from the computer is also other limitation in the management account information. Now let's move on to the fifth one, and that is based on assumption that may now be invalid. So this means that relying on assumption that might be wrong. So this means that information for management is often based on assumption. For example, general economic condition, competitive behavior, and customer attitude and taste, and these factors are difficult to predict. So this means that some information is based on guesses, and like what we have studied, that is the economic will do, and how competitor will act, or you say like what customer will like. So these guesses can be off because these things are hard to predict and can change quickly. So this is another limitation. Now, over reliance on financial information. So this means that, in simple word, we'll say they're focusing too much on money. This means that a lot of the information is about number and money. Much information supplied to management is financial, based on money, and this underestimates the role of other factors. For example, future sale may be dependent upon customer satisfaction level. So this means that this can overlook other important things like how happy customer are, which might affect future sale more than the money alone. So does this mean it is useless? Let's say we have discussed a lot of things about the limitation of information. So if I say that, does this means that it's useless management accounting information? Of course, the reason will be no. You know why? Even with these limits, management information is still valuable. The more information manager have, the better they can make a small decision. It's like having a guide, not forbid, but still helps you to find your way. So in short, I will say that management information has some challenges like costing time and money. We have discussed it, relying on the fast or missing neat events, but it's still great to for manager if they use it wisely and don't depend on it blind. So we have discussed about the chapter number 2. I think we have done with the chapter number 2, and now we'll discuss about the MCQs here. First, let me show you the summary and what we have done till now. Accounting efficient, that asset, liability, capital, we have done with that, double-edged accounting system, financial accounting, and the management accounting, computerized accounting system. And today we have discussed this domain management function like planning, control, and decision making. Then we have discussed the management accounting, information, budget, and forecasting, and so on like that. Now, if you see here, we have some MCQs. We have to discuss these MCQs one by one, and after that, we have a series of 80 MCQs that we will discuss in the next video. Now, if you see here, Which branch of accounting focuses on providing internal information to help organization operate more effectively? And that will be your management accounting, because management accounting is responsible for providing information for internal use to help organizations operate more effectively. Now, financial accounting is systematic guidance for the financial transaction, and this is for external users. Clear? Now, financial reporting. The financial reporting focusing on the production of external financial reports, financial statements. And the last one is cost accounting, that is related to collecting and allocating costs to products, services, inventory, and other items. So the correct option is management accounting. Clear? Now let's move on to the MCQ number second. What is not an example of the benefit of computerized accounting system? We have discussed this in a very detail. Ledger free from error. This is not the benefit of computerized accounting system. Computerizing system cannot ensure that the ledger are free from error. This is because it relies on user entry, and we have discussed the limitation of the management accounting, that they are focusing or they are relying on the computerized report, and if there's something happen in the input, then the report will be incorrect. So the benefit of computerized accounting, this is not the benefit, because ledger free from error will not be encountered with the computerized accounting system, and they will not ensure you about that. So this is because relying on the user entry. The ledger, the errors come from the input. So at the end, if there's error in the input, then you find error in the ledger. So for example, user could input a transaction to enter account. Now let's move on to another MCQ. Which transaction would be debit entry on the accounting equation? Now you see here, we have studied all about this: increase in capital, that will be your credit; increase in asset, that will be your debit; increase liability, increase in income. These all are credit except this one, right? Asset or debit balance on the accounting equation. Asset will be debited. Now, which statement is true of management accounting? Now, here's the question: then what statement is true about the management accounts? So the statement they include both financial and non-financial information, and this is the false statement. Now, if you see, there is legal requirement for them to be produced. This is false statement. They are concerned only with the past data. This is if you see here, then the management accounting is concerned only with the past data. So this is not correct. There is legal requirement for them to be produced. No, this is not this is not financial accounting or financial reporting. They include both financial and non-financial information. Okay, this is the correct one. They deal with the of the organization over a defined period of time. They deal the regional organization over a defined period of time, like a year. No, this is working for the all sort of things. Now, if you see here, what is the main principle of the management accounting? This is option B is the correct one. They ensure that every debit entry the corresponding entry is recorded. Now, these are the 5 MCQs we discussed. In the next lecture, we will only discuss the MCQs, and these are about 80 MCQs. And these 8 MCQs from the chapter number 2. And these are data which I have taken is from the ACCA about accountancy for your preparation. Thank you for watching.